ladies and gentlemen, I was going to hold off the show waiting for Tevis, but I knew I was never going to get the credit for waiting for Tevis. So he'll be here soon, I think.
Maybe.
Okay.
Cancel the show. There's no Tevis.
Yeah. Oh, there he is. Oh, okay.
Sorry, I pulled a Tanner.
You did.
Oh, 30 seconds late, practically. Gee.
Unforgivable.
Yeah, unforgivable. Exactly. How you doing?
Doing well. How are you guys?
Good.
Doing very well. How is the fundamentals of investing podcast that you do?
Yeah, doing well, man. Thriving.
Man, your name's Tevis. That should be the name of your channel.
Yeah. I need to change it.
Or even Fun of Investing is still a better name than Fundamentals of Investing podcast.
If I'm going to change it, I'm just going to change it to my name.
I love Fun of Investing, though, your handle on Twitter. It's awesome.
Mm-hmm. Yeah.
Was that just like struggling to figure out what the actual handle would be, and then you finally are like, hey, this works?
It's literally because I didn't have my name and face when I first started the account. And so every other name was sort of taken. And it was literally like, this was one of the names that wasn't taken. And that's what ended up being the name. There was no deeper insight or thought process than that.
It suits you. And it is good to have a face.
Anyone here see our sushi date that Tevis took me on yesterday? He came on after making a ton of money on Celsius and bought me dinner. Took me out on a night on the town and had some of the viewers join in on a Q&A. Lurker will never let it down, though. He had a bad connection and lagged out and wasn't able to talk to us. And I've been seeing comment after comment from him regretting that. Yeah, he just said, I'm still recovering. But let's not delay too long. I think everyone's starting to pile in here. So SoFi, what do you guys want to start with?
Fireside, maybe?
Fireside. Okay. CFO Chris Lapointe just recently had... Cheers, buddy. CFO Chris Lapointe just recently had a fireside conversation with, what was it, UBS? They talk about a bunch of different stuff. The compounded annual growth rates for the company going out to 2026. They had some tech platform conversations about the growth. Sorry, I can hear my cat meowing. Can you guys hear that? It's unbelievably loud. Anyway.
Before we go on, because somebody asked, where's Steve? I mentioned this on the Bootleg Weekly, but I'll also mention this now. Just Steve, I think, just had a couple commitments with work. And so for probably the next couple of weeks, he won't be joining the pods just because he's just focusing on work predominantly. We hope to see Steve rejoining when the situation calms down.
I think he's too busy counting all his money from Robinhood gains, honestly. Seriously. But I could be wrong. You're muted. I can't hear you anyway.
Hello?
There you go.
Good.
Just saying Robinhood is skyrocketing right now, and congratulations to shareholders. I think I'm going to have some content this weekend about that, but
nice.
No guarantees. Yeah, there were some really, really interesting comments on that fireside, by the way, guys. Like, really interesting. Top 5 bank, interesting. I think there was a little bit more information uncovered that potentially that top 5 bank might be Citigroup or US Bank. Some potentially leaning more towards Citigroup. What are your guys' thoughts between the two little rumors of who this new potential large client is?
Somebody said, keep muted, let Roy talk.
So, I wouldn't have that much to say. No, so initially I thought there wasn't a lot of real new information with the LaPointe Fireside Chat. And I, for some reason, heard it as a top 5 regional bank. And I'm like, okay, yeah, that's pretty much what we were thinking. Maybe it'll be a Truist or something. That'll be nice. and somebody corrected me on X, and I'm like, well, actually, it was when I was live doing a Spaces with some, just kind of mentioning some SoFi stuff, putting out the good word, and I looked it up, and I'm like, I stand corrected. This is actually a lot better than I thought. So it looks like there's more smoke on the Citibank side, but I mean, nobody knows at this point.
So I went full tinfoil hat on this, the USB versus Citigroup side of things. There's hints that push us to both directions. I mean, I think nail on the coffin for Citigroup was what Bender posted earlier this week, basically saying that he'd taken a look at the DNS records for SoFi, and it literally says or POC next to Citibank, and that was from late 2022. And so that's something that it's kind of hard to dispute that. It seems like I took it as unofficial confirmation, basically. And I mentioned this in a video I posted earlier this week to say that in my mind, that's all I needed to see to say this is confirmed that at least Citi was the POC. Now, that does not mean that that POC is successful. It doesn't mean that, Citi is a client or anything like that. It just means that per their DNS records, what Bender found, that it is Citi. In terms of the UBS side of things, a lot of the connections are from a people perspective. Derek White, Galileo CEO, used to be the chief digital officer at USB. And then the guy who followed Derek White is also now at SoFi as a senior vice president. He also used to be the chief digital officer at USB. So it's the last two essentially chief digital officers at USB are both senior Galileo executives now. So there's a lot of connection, especially given their role, right? They're chief digital officer. They oversee the entire technology aspect of that business. And so those connections are pretty evident. And I think that let's not kid ourselves, right? Like Anthony Noto from his Goldman background and the entire executive team, Lapointe as well. These guys have worked at these financial institutions in the past. They all have connections to these big banks. They all sort of chat with one another, behind closed doors, and they all sort of know each other. They encounter each other in different events. They know of each other's presence at the very least. And so the connections that we're making from an outsider looking in, just as a retail crowd, to say, oh, well, Derek White and Charles Schwartz both worked at US Bank, and now they work at Galileo. Galileo is a top 5 bank. Therefore, they could be a client, so on and so forth. Like, there's an increased likelihood because everybody knows everybody. And it's just, in my mind, a matter of time before they're like, just try the POC and see what happens. Or they have fewer people to convince because, if I know Tanner and we're both in the same field and we've known each other throughout the course of our career, I have an inherent trust in that person because I've worked with that person probably as a colleague directly. And as a result of that, I'm more likely to take them at their word if they say, oh, now I'm working at Galileo, and Galileo is something that's going to help you because I know the internal workings, because I was in your position at USB, so on and so forth. So I think that they have a lot more clients underneath the hood that we don't know, especially if we go back to the DNS records for Citi. Like, this was something back in late 2022, and we're only finding out about it like 2 years later, essentially a year and a half later. And that's even unofficial, right? And so you have to think about all of these initiatives that SoFi already has well underway that we don't even know about, that we're probably going to find out about, in 2026, that they've been working on since today.
Well, that's been one of the things that I think is most exciting that hadn't quite been followed through in the tech platform over the quarters of 2023. The growth was not coming in that strong, but management was saying the pipeline is stronger than ever, right? And so people were not putting the connections together of going like, okay, but where are the clients? But the sales cycle is so long. So that pipeline could have been Citigroup and a handful of different regional banks and different now what they were talking about on the fireside chat. So there has not been a lot of top brands and large non-financial institutions that have chosen SoFi's like Galileo's program. Not at least that I know of, right? Whereas Marqeta has a lot of those different names. So potentially now we could be fighting for a space that maybe we hadn't really been in before. So to give a couple examples, Marqeta owns Coinbase's card program or Uber's card program, right? That's especially one that really fits that bill, where you potentially have a company that is not directly in the financial space, but also has an ability to have a card program for their drivers because they can spend the balances that they've accumulated. If SoFi can then start going after those top brands, this could be a really big deal, right? And some of those top brands that maybe people should start looking into is like Target, for example, having one of the most successful card programs that exists today called the Red Card, Target's Red Card. Trying to go after brands that maybe aren't financial institutions is also a massive market. So the total addressable market just keeps expanding. And now we just need to wait for that funnel to actually start paying some real dividends for us. And hopefully, companies like Citigroup and everything start getting the ball rolling. But if we've been seeing low teens worth of growth rates in the tech platform, they think it's going to be 20 to 25%, 20% this year, 25% CAGR throughout 2026, there's going to be some real expansion in growth rates going forward. So I'm excited to see that. But Roy, any comments on that?
Yeah, it's just as a reminder, nothing's guaranteed. So just because it's in the pipeline doesn't mean it'll actually come out the other side and be a client. But I think there's a good likelihood of it. So, and it's lumpy. Yeah, it takes a while. So you'll see times and quarters where the tech platform is just flying, and other times where seems like nothing's happening. So just be patient. That's just the way it is with some of these companies that they have that in the pipeline. SoFi is no different with their tech platform. So, but I'm very excited. I was very glad to be wrong on the top 5 regional versus a top 5 bank. That is a big difference.
Yeah, it makes a huge difference.
There's one thing I'll say with regards to the LaPointe fireside on Monday. He spent the majority of that talk on the tech platform. And one of the things that I was saying in analysis with Tanner and then later on in the week was that SoFi's management is going to predominantly talk about the tech platform on an increasing basis because it's going to be a bigger contributor to the revenue mix. And as we get that, then they're going to talk about, even in that UBS fireside, he mentioned, yes, we have financial institutions, but also we have these other companies. Maybe they're fintech companies. Maybe they're not even in the finance space in general, but they want that exposure to Tanner's earlier point. And so it's going to broaden the range of their total addressable market for the technology platform. And the more that management reiterates that, then what we're going to get is in earnings calls, analysts are going to start focusing on that more. And as they focus on that more, they're going to incorporate that into their models that they're building out and into their forecasting to essentially assign a correlation or a high likelihood of saying, okay, what is the Galileo member count? Jesus, Roy's photo. What is the? I can't.
Is that even Roy?
That's like Roy the Tiger King.
You're muted, man.
That was me pre-COVID beard. So
Yeah.
I totally lost my train of thought.
You're making a good laugh out of people, though.
Okay, just to finish that thought. So my point is, the more management talks about it, the more analysts are going to touch on it, and the more that they model it out, the more the technology platform is going to be something that eventually leads them to having a hybrid valuation. I'm not looking at the chat. I hate you, Tanner. Stop throwing stuff up on the screen. And that hybrid valuation is going to be very important for the company because that adds a premium on their technology platform aspect of the business. And so it's good that he's talking about the intricacies, not only of like the teaser of the top 5 financial institution, but also of saying, oh, we're dealing with fintechs, we're dealing with all of these other companies as well.
Sorry, I was just going for the, I don't even think I heard a word that you said. We got caught off a little bit. I don't know how that happened. Oh, dude, that's really funny. Okay. So if I could pivot a little bit, because I literally don't even know what you said. Ally just lowered their APY. What did you say? Remind me.
It doesn't. Let's go into Ally.
I'm sure in my subconscious I heard it, but I was paying too much attention to these jokers. These dang jokers. Okay. Ally ended up lowering their APY on their money market funds. I think it was from 4.4% to 4.35%. Not a large cut, okay, but you can kind of see where the trend is starting to go. So this is the first tiny little domino to fall. We'll see if this creates, more in this area, and then potentially the checking accounts and these sorts of things will start to come down right after. But will SoFi stick to their word and keep it high at 4.6%? Tevis?
Yes, at least. I mean, not for too much longer than the rest of the bunch, but yes, I believe that they're going to be one of the last, if not the absolute last, to lower it. And we've talked about this before, the vertical integration that they have and the flexibility that they have to keep the rates higher, the APY rates higher for longer. It's essentially, it benefits them, right? Because whatever they're going to lose from a profitability perspective by keeping it higher when everybody else is lowering, they're going to gain from the entire cohort of users that want to leverage a financial institution or a bank that has the highest APY out there. Like, there's a ton of people that chase APYs, and if SoFi has 4.6 while everybody else is lowering it into the 3s and into the 2s, then a higher chunk of people are going to go to SoFi.
I have a quick question though, because Jones brings up a good point here. What about the point reduction that SoFi just put out, where they took away their, weekly login bonuses? Did you guys see this?
No.
I think Data Driven Investing was the first person that I saw post it where I saw it, but they were saying that they're restructuring their rewards. A firm actually just came out like probably 2 weeks before SoFi did, saying they were doing very similar things, restructuring their rewards. But now SoFi has done, I think it's the weekly bonus. That comment said daily, but I think it's the weekly bonus or something that they've completely removed from the app. I'll see some more confirmation from people, but yeah. Anyone else see that, by the way, in the comments?
Yeah, I didn't see that. But look, at the end of the day, if we take it one level higher, it's all a pendulum between profitability and member additions, right? The member benefits. And we know that over the past 2 quarters, that they've been focused nonstop on profitability. But that importance is going to be reduced somewhat, because in Q2 and Q3, they're going to be profitable enough where they don't need to make such drastic trade-offs. So they might turn the spigot back on to getting as many members as they can, right?
Yeah, I think that they're definitely going to keep it up higher. And I think that there's going to be others, that like Ally Bank will slowly but surely lower that. But I think Robinhood, I think SoFi as well, and several others will just say, you know what, we're profitable, things are fine. We want to keep the inflow going, and they'll benefit actually inordinately from the falling rates as others lower and they remain the same, because some people do absolutely chase the yield. So the main thing is the gap profitability, like you said, and what's a few percent.
Oh, I wanted to touch on Tevis. I now remember some of the stuff that you actually talked about. Sorry, there was a point there that I wanted to touch on where whenever SoFi guides multiple times on something, they usually end up hitting it more often. So think back to Q4 guidance being profitable, right? They were saying that for, they said it 20 different times. It ended up hitting. And then for some reason, it shocked some people that we even were profitable, as if they didn't say it like 20 something times. This, I think you're going to start seeing with SoFi with the compounded annual growth rates that they keep bringing up. That is one that we're going to continuously see, reiterating their midterm guidance, because there's a lot of, non-believers. So I think the new, like, SoFi is profitable in Q4 will be the EPS guidance for 2026. I think they're going to reiterate that multiple times every quarter. And yeah, I think they'll hit it.
Yeah, for sure. I think that'll be a drum that they'll just continue to beat. And beat in both ways, pun intended there. But no, they absolutely, like, I still don't understand why a company that has a history of beating their guidance and beating what they say time and time again, no matter what the macro environment is, that people doubt them. But it happens, and it's to our benefit as shareholders. It's our opportunity. So
yeah. Any other quick things? Let's talk about short interest. Short interest number had just increased to 17%.
Are you just reading off of my recent tweet on this list of things to talk about? Oh,
I got a comment that said, "Can you guys talk about the short?"
Fine. Yeah, so the short interest numbers came out on Tuesday, I believe. 17% of float, new record, 158 million shares sold short. That's a 33% increase from the January 12th number, which it's funny because the short interest has increased more in a month than the actual stock price has increased in that same time period. And yeah, 8 million shares increased from the latest filing that we had, which is the January 31st. One thing to note is that we are at a 2-week delay for short interest numbers. So this number is as of February 15th. And a lot of those people could have already been covering since that time because it's been 2 weeks and the stock price has gone up in that time. We're going to get the updated filing for the end of February on March 11th.
So, what do we not know? Why are they shorting? Why do these institutions feel so comfortable betting heavily against a company that is that's doing well?
It's a simple bear thesis. You can't spell bankrupt without bank, and SoFi is just a bank. So, I not quite that silly, but I one thing is it's a very volatile stock, so that does play into the hand of people that are shorting the stock. We do see, like Tevis mentioned, people go in and out of short positions. They're not necessarily holding, for a year, 2 years, 3 years. They're just looking to make a buck, and so it could be that a number of people actually are just trading it as short, or then they go and they switch long once it gets to a certain point. It is kind of a trader's paradise just because of that volatility. I think that the other factor is there is a bear case out there that banks and SoFi as well will not do well in the era of falling interest rates, which I disagree with. I think that they're completely wrong, and we're higher for longer anyway. So even if that's the case,
they should be reiterating.
They should, yeah. But yeah, I don't really see what they see. But yeah, if somebody's actually evaluating SoFi, they're just a bank. There's nothing more to it than that. They're just a bit overvalued based on their price to book compared to the traditional bank. I think, at least what I was looking at it earlier last week. But I think that they're just missing that there's a whole lot more to this company than being just a bank. It's also growing very rapidly, has an amazing product suite. The flywheel is working. Member growth is phenomenal. And they have 3 different facets for their main income, which is diversified so that it's resilient even if the macro sours. Like I'm telling you guys what you already know, but people are missing it. And actually, so I was on the Spaces a few days ago, and normally these guys cover energy, but they occasionally invite me in for some fintech things. And I shared a few things with SoFi because it was interesting. It had run up a good bit at that point. And it was the first time many of the folks there had heard about the company. And so one of those things, like when you first look at a company, there's nuances, right? There's things that you'll look at and you'll be like, that doesn't look right. That doesn't look good. So one of those pieces was on free cash flow. If you look at SoFi or really most banks for free cash flow, it's problematic. Like it's one of my favorite measures. Steven, if he was here, he'd say the same thing, but you can't really use it to judge SoFi just because of the way that those loans and those customer deposits look like. And Chris, Data-Driven Investing, did a good job kind of writing up a bit about it. And I think there's a longer article coming out. But no, just, as first-time investors, first-time people are looking at that, they might look at that and say, okay, this is incredibly overvalued. This is just stupid. And then taking a small short position. But it's dangerous.
Yeah.
Yeah.
Go ahead,
I think that, so a couple things, right? The chat is also highlighting it. Like it's a high retail name. It's fairly liquid. We don't know how long a lot of these shorts are in, whether this is like a long period of time that they're shorting or whether they're in and out on any given, week or month. I think that a lot of people are taking them at face value when they've said that their lending segment is going to fall as well. It's the same people who are like, oh, well, SoFi relative to JP Morgan, if we look at tangible book value and you're like, dude, like they're growing like 40% a year. You can't value them like that. I think those are the same people who are going to make the argument to say, well, their lending is actually going to fall, and their lending was their biggest contributor to revenue. That was 60 something % of revenue in 2023. And so actually this is a broken growth story, or it's going to be more evident in the coming quarters that it is a broken growth story. And we can read between the lines and know that that was a sandbag guidance, and that's actually not going to be the case. I've been saying for, ever since the Q1 or Q4 earnings came out that I think lending is going to be flat to single-digit % up because the macro is not going to be as bad, and the macro is a serious undertone for their guidance.
Do you think that SoFi is potentially the best digital banking stock to buy right now at these prices?
I don't know enough about other digital banks. I know you want me to say like New or something, but I don't know enough. So SoFi is the one I'm buying.
Yeah, New is really good, but it's run up a lot. Like I don't know. The last time I had a red week, it's been maybe last year. So they're killing it, but so is SoFi. For myself, with the short interest and with the execution of the SoFi team, and then the valuation, I love selling covered calls on my positions, and do quite well with that. I have not been on SoFi for a couple of weeks now. The valuation's down low. The premiums just have not been there. And I'm not willing to risk some upside gain on, pennies on the dollar right now with the short interest being like it is. Some people will, and that's great. And I could be wrong, but I think that there may be a moment where the shorts get caught red-handed, the stock just pumps because it's undervalued at 9. I'll say that. I don't know if it's the best out there of all the possible names, but it's the one I'm buying. And every single week, I think is it 7 weeks in a row or 6 weeks in a row? I've been buying SoFi. There's no other position I own that I've bought consistently all through those weeks. And I've been trimming and taking some. Actually, I sold a little bit of Robinhood, about 10% of the position yesterday. And guess where that's going next week? SoFi.
Where? There you go. I'm surprised you trim Hood. I'm like looking for entry into Hood right now, not trimming.
The only reason I did, I took gains last May on the position, and so it's all house money at this point.
Yeah,
but I decided to take just 10% off the table. I've been selling puts on some miners, crypto miners, and got caught this week, and that's fine. I'm good with that. I just wanted to have a little cash lined up with how strong that correlation is between Robinhood and crypto. It's stronger than it should be. Like if you look at their actual revenues and the way it pumps just right along with Bitcoin, it actually has a stronger correlation than most miners, which is crazy. But it is what it is. And so seeing the weakness in the miners this week and looking at Bitcoin, I think Bitcoin will continue to pump, and Robinhood will do quite well. But I'm like, I'm going to regret more if Robinhood falls back to 12 or 13 and not having any capital to rebuy that or buy some SoFi here, versus some extra profits that I might have missed out of. I'm up 400%, not 400%, 300%. And so I was like, I'm going to take 10% off the table. So, but yeah, the rest I can let ride now. I don't have to worry about that. But yeah, we got to talk Robinhood, I guess, maybe this next week. We might have a number of times where we're talking throughout this week.
Yeah, well, you keep pushing the date back. I'm ready when you are. So
Okay.
you let me know.
Well, we have PayPal's event on Monday. We have Nubank and we have Robinhood. So I think we just got to meet up like the rest of the week. So,
can I just say really quickly about Robinhood?
Do it, yeah.
Because what else is there to cover on SoFi's thing? They did a personal loan ABS deal.
Is this called the Robinhood Weekly podcast?
Yes,
I know, but I'm out of the stock's been flat. The news has been top 5 bank, and I've covered it 6 times on my channel. This Robinhood news is exciting.
Have you guys noticed that it's been quite a while now since we've had downgrades? And normally I wouldn't say that because you generally get analyst upgrades or downgrades either a week before earnings or a week after earnings. But for SoFi, you sort of get them whenever Cavarini wants to post a note. But we haven't had any. Has it been, have you guys noticed how quiet it's been?
Yeah, it's been very quiet.
I've noticed that with a lot of names that I follow. I don't, I have about, 12 names, 13 names that I follow, and very, very few upgrades or downgrades. So I think that may be more macro than anything, that people are just still thinking that there's going to be a pullback. And they're like, well, what if it just keeps pumping like all the way through the year, that this is just a bull market, that week after week there's pullbacks, but like it's just off to the run like racetracks. They'll look like idiots if they have the downgrades and upgrades. Like it's at a point of indecision, and we just keep hitting all-time high after all-time high in the indices. And I don't know about you guys, that surprised me. I thought we would have gotten a pullback by now. No complaints, because I'm long, but it's been good.
Someone just put in the chat the 10K. Why didn't we talk about this? That's literally what I titled it. Yeah, okay. I'll stay on SoFi for a sec because this was actually really interesting. We got the 10K information. Can't believe I forgot about this. I'm sorry about the flashbang. I just opened up my spreadsheet. I want it's 10 number times. Okay, let's do this. So the loan numbers we finally got for personal loans, home loans, student loans, credit cards, all these things. Did you guys end up kind of diving into the 10K a little bit? Do you guys know what the credit card default rates are?
I haven't had time yet. No.
Okay. Do we remember what they were before?
I think they went up, right? They were like 4%. I thought I saw somewhere.
No. They were 18%.
They were really bad.
Oh, credit card. Yeah. Okay.
Yeah. Credit card. Sorry, you're thinking personal loans.
Yeah.
Personal loans was like 4.0 something 4%. Yeah. So that you're bang on. But credit cards was like 18% before. Okay. It was as high as 20%. Do we know what it was this quarter? Let's take some guesses. Any?
Well, since you're bringing it up, let's say 11%.
Yeah, 14%.
15.5%. Now I sound like a downer, but it's improving.
You're so bearish, Tanner. Come on. No,
I'm excited. They are making great strides in the credit cards. Remember, you can't just wipe away all the existing clients. We still have a bunch of really, really high-risk clients that are on the books. So
yeah,
we're not just allowed to say like, hey, sorry, we forgot to issue, or we didn't mean to issue that, if we could just snip their card away from them. So, the new people that we're trying to, I guess, issue these cards to are of better quality, and we're going to continue to try to rotate out of those extremely low FICOs. It's weird. it's really, really weird how many credit cards SoFi has given out over the last year and a half of people under FICO, like under the FICOs of 599. That's unacceptable in my opinion. Whenever you're talking about having, clients that are, supposed to be really, really high end.
PayPal did the same thing under Schulman, and I mean, it wasn't just his decision. As recently as like midway through Q3, and they had very high default rates on those merchant loans, and so they actually had to pull that back and revise that. And I've seen that a couple other places as well. So credit cards is one of a couple of platforms that I've not been impressed so far in the execution, but that's making headway. So we got to give it time. And the great thing is SoFi's profitable now. So, if something's not firing on all cylinders, that's okay. They're well run and they can improve. And I'm glad that they're taking steps to, well, so the other thing too, with credit cards, it's been a little while since I was on the website looking for those, but they were not easy to find. So I don't know if that's a factor too, where it's just kind of hidden off in a corner, and maybe they just are offering it to people that are, through advertising or something that are credible, but I'm not one of those people, I guess. I'm not good enough. I don't know.
Well, so let's look at the last 4 quarters or so of credit cards. So I'll start with Q4 of 2022 and work my way through. You tell me if there's a change of pace here. Last year, 17,500 new credit cards issued. The next quarter after that, 22,000 new credit cards. Next quarter after that, 20,200. Next quarter after that, 22,500. This most recent quarter, 9,500.
There it is.
Cut like more than half. Bang. We're stopping. We're going so I honestly think that they're resetting. They're taking a new approach. And that's the one thing I like about SoFi. I keep finding like these not glaring problems, because it's not obviously a big portion of their company, but we literally come out and say, hey, these are big problems. And then they go, okay, we're going to address that. Like I said, like a couple days ago, I was like, hey, we need to hear from Derek White. Like I want to hear from the actual Galileo people. And then I see Galileo like post a thing like Derek White's going to be speaking here. I'm like, awesome. That's, worked out well.
I saw one thing, because I know that we've mentioned in the past around the credit card business, but I recently saw this, Tanner. We were in the same chat when we saw this. They actually acquired no credit card business from the Golden Pacific acquisition at all. So
I heard, I saw that and I don't believe it, because I remember reading that they did acquire quite a large credit card business. So I could be wrong, but I didn't take that for fact.
Right, but it's written down somewhere. It's not like
you saw the writing.
No, I didn't see the writing. I'm just saying, like, it is written down somewhere. It's not a subjective thing. Like, we can get a definitive answer to this.
Sure, but I'm just saying I want to see the definitive answer, because I saw a person say that, and it's just a person. But yeah. Anyway.
But either way, I mean, credit cards is a very small percentage of their business. And we know that alongside invest are 2 areas that they're just losing money on. So, I mean, you could have seen it also from this last quarter as they drove towards that profitability, that was an easy thing for them to cut that risk. It'll be interesting to see how that evolves throughout this upcoming year, what it looks like in Q1 and so on and so forth.
Yeah, I'm really excited to see, because credit cards are really, really profitable if done right. But obviously it's a risky business.
With SoFi, like, they have so many different lines of business and lines of products and initiatives that it's a trade-off. It's a cost benefit analysis of what they divert their focus on first, right? It's not like
they what can I just thought?
Yeah.
Well, like, Capital One just acquired Discover Financial Services. Why don't we just acquire Capital One? We'll figure it all. I'm just kidding. It's a joke.
You interrupted me for that shit.
You hear some people say that though, where they're like, SoFi should acquire
PayPal.
Charles Schwab. Okay. Sorry, go ahead.
Go ahead, Roy.
No, I was just saying that I heard that a while ago. So if I should acquire PayPal, like little different market cap size there, so that would be difficult. Great business, but we're not there yet as a company. So
yeah, the best is like
JP Morgan be done with it.
The best is like, well, SoFi's an $8 price and this company's a $4 price, so obviously one should acquire the other. And well, there's a thing called market cap.
No, I remember when I first learned about market cap, I'm like, oh, okay, that makes more sense now. I mean, everybody's there once, so.
I deal with the same people over and over that call me and they go, but this stock is cheap, right? It's only $9. And I'm like, dude, it could be $1 trillion. Like the market cap could be $1 trillion and the stock could be $9. Like I try to explain so many times and people still look at the price of the shares to be like, that's the value. It's cheap. But anyway.
I mean, psychologically, there is something to that's one of the reasons why stocks will do the splits. It just, it looks cheaper. It'll attract a different type of investor. And then there's Mercado Libre, and that just Melly's like, no, we want our stock to be like Berkshire Hathaway one day. So SoFi though, like that, I mean, that's one of the things going for it is it does look very cheap, and it is cheap, frankly. But just because it's $8 or $9, we're right under $9, $8.99. That's right, market maker special there.
That's ridiculous. It was just pinned at $9 all day long today. Ridiculous.
Yeah. Oh, not everybody probably knows what pinning is, so you want to explain that just for a second?
It's literally what it means. Like they pinned it to $9. Like they didn't allow it to move past $9. It went to 901, 902, and then it went back to 9. $8.99, $8.98, it went back to 9.
Yeah, it's about options right there. And you'll see a lot of battles right there at the 99-cent or $1 mark on a lot of tickers that are close at the end of the day. Market makers really don't want that to be in the money. Others that have short position or put positions, same thing. So that's not unexpected on a Friday at all.
Yeah.
What else do we have in terms of SoFi stuff? Oh, well, I can quickly talk a little bit more about the 10K.
I saw this thing that Michael Rowland posted. I'm not sure whether it was the 10K or not, but it looked like it. It was a line item which talked about the executive compensation. And Tanner, I'm not sure if you saw this or not, but
the Anthony Noto thing.
Yeah.
Go ahead.
I'm just throwing this in the private chat. Maybe you can throw it up on screen. So Michael Rowland posted this on yesterday, I think, and it showed the base salaries of the executive officers. And it has this disclaimer at the end that says, in May 2020, Anthony Noto voluntarily forfeited his annual base salary for the remainder of that year in response to, the pandemic and the macro uncertainty, which is kind of cool. I mean, there's a lot of CEOs that did that also, quite a few actually, but it's really rare to see that from a CEO who's not also like a founder, because a lot of the times the founders will do it simply because they want the company to continue to thrive and they want the company to, be in a good spot financially speaking with something that they can control. And we're seeing, Anthony Noto, that he did that voluntarily, which is, I think it's cool. It's inconsequential to the actual amount. I mean, 600K is not going to make or break SoFi, nor would it make or break SoFi back in 2020 even, but it's still a class act thing to do. I mean, the guy's like $100 million plus net worth. So 600K doesn't really mean anything. It's just a nice gesture.
I don't think he was back then. I think he like more than doubled his net worth whenever Elon bought Twitter, I think, or something along those lines.
I mean, sure, but like even with his Twitter shares before Elon bought it, it's tens of millions of dollars.
Tanner turned down YouTube. No, I did not. But no, I did not.
Of anyone on the pod that would do that, Tanner is the last one on the pod to do that.
Well, I mean, it's free money. The YouTube just hands you free money. It gets spawned out of nowhere, and they give it to me. Came from no one, and into my pockets.
Magic.
It's magic money. Yeah, it's very exciting. Not the first company to do this sort of thing, but definitely a sign of great strength. Yeah, I don't know if I did know of this before Michael showed this week, because I felt like I remembered something vaguely about it, but yeah, it was definitely a good addition.
Can I show you guys a post from that Chris Hager just posted about? So I saw this on Reddit yesterday or 2 days ago, and I just saw Chris post about it earlier today, and I want to read this out to you guys. This is around the Citibank partnership. Tanner, if you want to throw that up.
Timothy says, I have a magic money thing, but it involves opening multiple credit cards and paying off the one for the other
one. So this person on Reddit, I mean, Chris says, just a little bit more fuel on the speculation. It's just a person on Reddit, but I'll read this out because I thought it was pretty funny. I didn't realize it wasn't confirmed yet to be Citi. I'm in Sioux Falls. Is that how you pronounce that? South Dakota, I'm guessing, where their headquarters Citi is at. And when I'm talking SoFi with people who there's one type, oh my gosh, grammar. When I'm talking SoFi with people there's one type of reaction. When I talk SoFi with some Citi folk, there's another look in their eyes of wanting to talk about it more, but can't. I just want the news to drop for it to be Citi so I can give someone in my neighborhood, especially a hard time for having a bad poker face. So, I mean, not like the nail in the coffin that we want, but still interesting to see people's experiences.
Yeah, no, I think there's just more smoke for Citibank. But I mean, either way, it doesn't matter who it actually is. Like that, it actually is just exciting. So
it's very exciting. It's very exciting. But
I guess let me ask you guys this: do you think that will be made clear as far as who the partner actually is if it comes to fruition? No,
never.
Yeah, I was thinking
never.
But,
they're probably going to get a slap on the wrist for saying top 5 bank. Like, yeah, I don't think that they want that to be known. And one thing, I think that this is almost purely for core migration. So it's not like Galileo is going to get the full buck here. I wish they would, but Citi is like, I think, the number one debit processing company on or in America. I think they're even higher than JP Morgan. So yeah, I don't think that Galileo is going to win the card program, considering that Citi is like the largest competitor to Galileo. So I think this is just going to be for core migration. So people need to keep that in mind, but it's still a heck load more in revenue. It just might not look directly straight to accounts that we see that they post on, the 145 million. If that makes sense.
No, that does, yeah.
But revenue per member will go up, or revenue per account.
Oh yeah, like we'll see it. We just want to know who it is, and
yeah,
that's how it is. I'm not as familiar as far as with the bank side. With Galileo, I know is tech integrating a bank, but I figured that would be anonymous. Usually it is. You just don't want to give that information away.
Yeah,
but, doesn't matter for us. At that point, we're just excited. Fire yachts.
I agree with the wisdom of life. It's getting boring. Okay. I want to talk about Robinhood. I want to talk about Nubank.
Robinhood.
Are we doing this here, or you want to do this in the after hours? What are we doing?
Both, man. Like Robinhood's so freaking exciting right now. Like
Okay.
It really is. It's so exciting. I'm like, I've never considered going long on Robinhood, just hitting it this year. I'm not there yet, but I'm thinking about it. I've never thought about it before, and I'm like,
it's a trade for you, right?
What's that? Oh yeah, trade.
Cool.
It's a unique confluence of events that line up perfectly in 2024, and I'm seeing it play out actually even better so far than I expected. So I'm not crying too much over that, but they have such a strong suite of products that are very well integrated. They ship them out very, very well. And then this 1099 gig economy that they're going after. I don't know if that's where you're going, Tanner. I caught a bit of one of your fintech weeklies, but
excuse me,
I can't remember the name of the show. Remind me.
I do it daily, so even if you said
Daily.
fintech daily, I would have been
Okay. Yeah, fintech daily, not SoFi daily. But no, it's very exciting that they're aggressively going after this. They just have 3 partners to start off the bat, but that is a relatively. Well, I don't want to steal your thunder, Tanner, but
no, there's no thunder. I just want I just wanted your thoughts. Let's just shift the topic. I'd rather listen to this than. However, it was getting boring, but the boring investor, who's not a member, by the way, said save it for the after hours, which means he doesn't want to hear it.
he wants the boring stuff now,
Yeah.
and then we'll get on to Robin. SoFi's not boring, but there are times, guys, when stocks just when companies are just not a lot of news. They're still firing quite well. They're doing quite well, but it's like, hey, we got the news that we got.
Yeah, if you just want to hear more SoFi, like Tevis and I have a library of stuff that you can go back and watch. It just might not be up to date, but there's not a lot of news right now.
Yeah.
But so I wanted to speak on Robinhood really quick, because one thing that people really don't appreciate in Robinhood right now is how fast they can accelerate their growth and lower their customer acquisition costs, stuff like this.
Mm-hmm.
So during hot markets, brings a lot of retail investors, brings a lot of money in trading, and Robinhood can double their revenue if trading on their platform doubles. Like it's as simple, like the math is easy. But now they have this new, I want to say gig economy platform where they're going after partnerships with Grubhub, GoPuff, TaskRabbit. Those were the 3 starting ones that they really talked about. These, massive gig economy players, and saying, hey, we're going to integrate with them. And whenever those people are making a certain amount, we're going to offer them the ability to invest with Robinhood, because this is becoming a real political issue with the gig economy, is that these people aren't, planning for the retirement. So, Robinhood is helping these gig economy companies politically, in my opinion. And also they're doing what Shopify does, where, partner for all, because they won't need to create their own solution. Honestly, if you saw a stock come onto the market saying they offer what Robinhood just added onto their platform, that would be an entire multi-billion-dollar company. The company that helps gig economy and creator economies with their financial retirement plans. Now Robinhood is taking the infrastructure that they already have, the platform that they already have, and offering this ability to acquire new customers and invest directly through those platforms, take the assets under custody, and then cross-sell those customers into potential, long-term clients for other products other than their retirement accounts. But the retirement account is the most exciting for me, because it's the longest time, like it's the one where you can see the longest benefit for Robinhood, and really adds a floor, in my opinion, to the stock price. That's what I'm really getting excited about with their acceleration in retirement and in gold, right? Is that the trading fluctuation for SoFi or for Robinhood was just so high, right? If the markets were great, they'd make a ton, and then whenever they were bad, they would crap out, and you kind of get this extremely volatile stock. But with retirement accounts and these gold $5 a month plans, they're making consistent revenue, and it will change the way that the stock is valued, and you're seeing it.
Yeah, there's just a bunch of, I don't know. There's just a bunch of volatility, I feel like, in Robinhood inherent in their business model. And we're going into a volatile period, so I get it. But it's just like in the next down market, they're going to be the same as they performed in 2022. And that's not
because they have a floor now. They have a floor.
Not necessarily.
They have $7 billion, and they have those retirement accounts that are not disappearing. And then as they're bringing in those new retirees, not retirees,
Sure, but Roy, they
and the
had
1099, then these people are getting used to the Robinhood interface, and user interface is really, really good. When you're used to something, even if it's not great, you're kind of used to it. And switching is just, unless there's something very, very attractive and compelling about switching, you don't. These people are, many of them are going to be Robinhood customers for life. So they've done exceptional in acquiring new users, and this is without the UK coming online, which
Right.
is starting this quarter. I've seen some indications of that. But I agree, it's a cyclical stock. That's one of the things that the market's starting to realize that now. I realized that a while ago. That's why I went in, somewhat heavy in Robinhood with those leaps. But it's going to do very well this cycle. And you're right. When the markets aren't doing quite as well, crypto's not roaring, it'll still have a floor. It'll be okay, but it'll just it'll do what Robinhood did. You're right. In 2022 at a much higher level, but
Sure.
it'll just kind of be flat, up and down, trading the range until the next cycle. But me personally, like with the changes that they're doing, the product suites that they're rolling out, the level of execution, I'm considering not going, I don't know. Like if we get a pullback, I might just buy some shares and go long, honestly.
But so what's a pullback? Okay, so here's the thing, though, right? Yes, first of all, I'm not bearish on Robinhood at all. Like I'm just on the sidelines. And I think the point that you brought up, like all of these points were still evident when Robinhood was like a $10 stock, $8 stock. Like they still had $7 billion in cash. They still had the European expansion. They still had a lot of these initiatives. And yeah, the volatility, it's the same problem that Coinbase has, right? With crypto. It's the volatility of the underlying market because their main revenue is transaction revenue. And so now, like Tanner said it, I'm waiting for a pullback. You said I'm waiting for a pullback. Why didn't
I didn't say waiting for a pullback.
You just said I'm waiting for an entry point like 20 minutes ago.
Oh, okay. Sure. Yeah, but it's more me looking for like more research to get in. I'm not like, I don't have a price target that I'm like, I'm going to jump when it hits 14 or something.
My question is, what's different now than a month ago when this thing was $8?
Because
even 2 weeks ago.
Because their gold platform, well, the same reason, because the story is changing. Because their gold platform is doing much better than I would ever have anticipated. They have an appetite to acquire companies and integrate them quickly. They're becoming a full service platform, and I know how to gauge, or at least I'd like to think I know how to gauge companies like that. And so brokerages, here's the difference between my opinion of why I like Robinhood potentially over Coinbase. Coinbase is in a market right now that is so fruitful, and they're going to make a freaking fortune. But as the asset class gets more mature, the take rate that they can have for crypto is going to have to come down because there's going to be more players that are much more mature, right? So, a lot of these large banks are now asking to become like real custody owners of cryptocurrencies. The actual broader market will become more mature. The equities market, however, is as mature as it gets because Robinhood literally came in and redefined the pricing of how equities get priced for sale, like payment for order flow. So we know where their floor is for commissions, okay? And now they're adding on additional services. The difference between Coinbase is the take rate might come down and they have to fill that gap with ancillary products. Robinhood, the ancillary products are additive to the business, not replacing old high commissions. So, everyone knows equities are booming. I'm in the very big camp of Anthony Noto that retail is going to have a much more hands-on approach to their own financial future. We don't need mutual funds. Index funds can be purchased directly from. Anyway, I think it is a different story than back whenever it was $8. They're offering new products that they didn't offer before. They're expanding globally.
Is it just that one earnings report then that completely changed the growth story in your mind? Because I think that's the only incremental piece of data that we've gotten?
It's been the last two earnings for me. I did them live. You guys can go back and look at my reactions. The one whenever we watched it and it was at like $9, I said, you know what? I could see myself owning this company now because I was quite bearish on Robinhood. And as their earnings came out and surprised me in multiple ways, I've just shifted my focus. I think they've become a very mature company. You know, their stock-based compensation has really changed. Like the way, Vlad Tenev and his partner, I forget what his name is, have cut their stock options. I just think, I don't know, the story's changing. I like the company, and if we do go into a full market, like broad market, not just the Meg 6, like you're going to see a lot of transaction revenue for Robinhood, a lot. And sorry, I'm going to just say one last thing, and then I'll stop my thing. We can go on to the after hours. Tom said, floor equals nothing because all companies have a floor.
No.
The idea of just a floor means nothing. It's a raising floor, right? It's like talking about monthly reoccurring revenue where other things are bonuses. So there's no such thing as every company has a floor. You're talking about what is actually reoccurring and high chance of it actually happening. And Robinhood is growing that. Retirement accounts and their gold subscriptions are very, very sticky.
And I want to add to this too in the after hours. There was something that I saw in Q4, a couple of things, and since then that made me think of this no longer just as the golden confluence of 2024, but thinking about 2025, 2026, 2027, which changed my perspective a bit. So
you don't want to talk about that right now?
I mean, we could. It's going to take a few minutes, though. So.
Go ahead.
Okay, so yeah, basically, my thesis was a golden confluence. So you got the crypto firing on all cylinders, the equities firing on all cylinders, and you still have high interest rates. So you have all those flowing together. And it's like, hey, 2024 is going to be the year, maybe into 2025 a bit, and then I'm out. I'm done. Like they'll do well, I think, in the future. Two things changed for me. One is being reminded, which is my fault for overlooking it, just what they have been able to accomplish really since they've done their IPO, as far as the products that they shipped out, the developments that they've led with, and just I know that they're the leader in this space. Like just frankly, as far as innovation, that they will launch something and then others will copy later. And almost everything that they launch is a very good, very credible product. Then you see like the X1 credit card platform, like it being tantalizingly offered. These are products that I mean they have a high success rate with their products. What they're getting, and
it'll be interesting though to see that though. That's a different product. That's lending.
Oh yeah. It's a different product, but it is one of their products. But like looking at the whole history and then what they've done this year and with the launches, like okay, they are shipping out, and I'm invested in PayPal. It's like it's been the opposite saga, and I'm like, okay, I have to give Vlad, like he's not my favorite CEO, but it's like he is an amazing CPO. He's a CEO right now. He's an okay CEO, but like what they've been able to ship and do consistently time and time again is like incredible. In Q4, the operational costs, they've been promising this. They've continued to control this. Even the cost of acquisition was lower than I expected. They're just being very, very efficient. They're being very wise with how, and I looked back at the year. They had two acquisitions, X1 was a big one, and they had another that was smaller. So they've been very, very conscious with how they actually spend their massive war chest of $7 billion. And it's not just because they're trying to rake in the high interest rates. They alluded to being open to acquiring more as they go through the year. When Vlad has said that in the past, that is not just maybe we'll do it, maybe we won't. We're in talks right now and we're looking at something.
Yeah.
And just the level of execution, be able to do that and actually integrate the products in the past is very good. Like, and so I'm just like, I'm comparing the culture of Hood and PayPal, and I'm like, in the past, I think Chris is changing that, but I'm like, okay, I got to give more credit to the management. It's actually better than I thought. And then the last piece is what Tanner largely talked about, is doubling and then tripling down on the retirement accounts. That is what will weather them through the storm. That these people, yes, they're locked up, for the year using gold. They can move off after that if they want to. I don't know that many will actually want to. Robinhood offers an amazing suite of services. Maybe there'll be people that leave for sure, but a lot of these people they'll be here to stay. They love the user interface. It's easy to use. It's easy to understand. The learning tools are all right there. And they're always adding and innovating other things on. So I with that piece, and they're pretty much, so I get a lot of ads just because I'm a Robinhood investor and I've searched for that. Almost every single piece is not like, hey, go after our crypto and do that, or equities. It's all freaking retirement accounts. Like, it's just time and time again. This is a very different push than Robinhood had back in the previous bull cycle. And then seeing internal communication like Vlad and then like Robinhood's actual X platform saying, hey, there's an incredible demand for a product. If you have an appointment with us to actually transfer your account over, you need to keep it, or it might be 2 or 3 weeks later that we actually get to you. I mean, maybe they're just pumping their stock. I don't think so. They're doing an incredible job of executing. There's a stronger long-term bull case and thesis than I gave them credit for.
Yeah, I think we'll rotate this into the after hours. But one thing to take away as well is that one retirement account is not the same as one, regular transacting account for people's day-to-day trades. It should be worth much, much more. So the shift is very exciting.
The thing that I think about with regards to the retirement accounts is like, what is the take rate of those, of that product line? Simply because it seems to me that it's a little bit skewed outside of their core target demographic. Their core target demographic being young people who want to trade, as opposed to people who are like the Matt Moneys of the world who are doing dividend investing for the long term, are probably not doing it on Robinhood.
Yeah.
But if I'm buying options contracts and YOLOing and if I'm on Wall Street Bets, then yeah, I'm going to be on Robinhood. But generally, I'm not going to be buying Robinhood's retirement product because that's not what I'm on Robinhood for. That's
a beautiful question, Tevis. I don't know if Roy was just Googling it because they answered this in their most recent earnings call. Oh, you weren't? Okay. Okay, then I'm being put on the spot. Maybe we should transfer this to the after hours. But anyway, it's their average account that came over had more than 6 figures in it, which is what they said. So they are much, much larger accounts. They said the average person that was coming over for their retirement accounts are larger, or I forget what the ratio was, but they're much, much larger than their traditional accounts that they have today.
There's a neat slide that we'll show in the after hours.
Yeah. Okay. Let's do that. And then we'll also talk about some new bank as well. Ladies and gentlemen, thank you so much for watching. This has been Roy, Tevis, and myself. And the podcast got interesting at the end whenever we started talking about something else.
Can you tell people how to get to the after hours before we sign off?
In the description, or the join button right beside. You have to be subscribed, and then there will be a join button right beside it, right underneath me. If you're on TV or something like that, it might be harder to get to. But for mobile and desktop, there's a join button down below, or it's in the description down below.
And is it live?
It's not live. It is tomorrow at noon. But we're going to go record it right now. And then, yeah. And it's our 20th episode, by the way, tonight. So whenever you guys join as members, you're getting 20 episodes of, Steve talking about his craps gambling strategy, his Pokemon strategy, meta, all sorts of stuff, Vision Pro stuff, all sorts of great stuff. Deep dives in Nubank.
Tesla bought AI, whether Google's screwed because they're too woke. Like, there's so many different interesting topics that just go from stock specific to just totally existential. Like, what is the future going to look like? So,
well, ladies and gentlemen,
worth it.
See you guys there. Bye now.